Welcome to the second video in the January 2025 series here. This is where we're actually going to code the strategy that I showed you in the slides in PineScript. So I assume you know how to get to this point here where I just have a daily chart of SPY on TradingView. I'm not going to give a tutorial on how to sign up for TradingView or the basics of how to use it. So from this, you've got a daily chart of the SPY. Go ahead and click the Pine editor at the bottom left. And then you're going to click this little drop down and then go to create new and then click strategy. So you have the option indicator, strategy, library. We're going to build a strategy, not an indicator or a library. And then it's going to bring this up. This is a lot of boilerplate code that it gives you. Go ahead and remove pretty much all of it that you see except for these two lines. So lines 4 and 5 in the boilerplate, that's what you're going to keep. So I'm going to go ahead and get rid of all this. I'm going to get rid of that, and then we're just going to make those lines 1 and 2. So I'm just going to go ahead and explain the first line here. Whenever you type // that is a comment, and that tells TradingView that the rest of that line is not going to be code that's executed. Really, what comments are used for are they're used for taking notes or putting notes in your code to better explain what parts of the code do. And it's also a way to structure the code. So you'll see as we develop the strategy, we use comments to kind of create sections of the code. Now, one thing that's important to know is that TradingView has been around for quite a few years, and there's different versions of PineScript. And so you'll notice this very first line is actually a comment where they have this thing called @version equals 6. And this just is a way to specify what PineScript version that you're going to use in this script. The latest version as of this video is PineScript version 6. That is the version that we're going to be coding in. When you watch this video, there might be a version 7, and so you may want to still code with version 6 and then switch it to 7, see if there's any changes that need to be made. Usually hovering over any code that gives you an error will kind of tell you what that error is, and you might be able to just make that change yourself. So we're just going to go ahead and leave this that specifies the version. Don't worry too much about the @version and what exactly that means. That's just TradingView's way of telling it what version you're going to use. So line 2 basically declares that this code is going to be a strategy. And I don't want to dive too much into the technicals of why it's structured like this. Just kind of bear with me and code along with me. And then over time, as you kind of get used to how code looks and is structured, then you can dive into the documentation, maybe read the technicals as to why it looks like this. So you'll notice that there's the word strategy, and then there's these parentheses. The things in these parentheses, which are all separated by comments, by the way, they're what we call arguments. You can think of them as parameters to the strategy. So the first parameter or first argument, which is the correct term, is in quotes, and it's called my strategy. So that's the name of the strategy. Well, we don't want to call it my strategy. We actually want to name it something that's a little bit more important or more relevant because we're going to be developing several strategies in this series. So let's go ahead and name this new 10-day high and low IBS. So IBS is not something that I talked about in the slides. What I mentioned in the slides is that the entry condition is that there has to be a new 10-day high and the market needs to close in the bottom 20% of its range. What we're going to do to capture where in that bar's range did the market close is using a formula called IBS, or internal bar strength. And I'll explain that a little bit more in detail once we get to actually coding the IBS formula. But just for the sake of the naming here, I would recommend just putting it as new 10-day high and low IBS. The second, the next two arguments here, you just want to leave them as they are, as defaults. So overlay equals true, fill orders on standard open, high, low, close equals true. We need to add a few other arguments though. So go ahead and put a comma here. And then the next argument I want to add is initial capital. So you just type the letter I and it should pop up, and you can just hit enter to have it automatically put the word initial capital there. And the most important thing for all the strategies that we're going to develop in this series especially if you're coding long, is that you use a consistent initial capital, because the max drawdown and the net profit are going to be based on the value you set in the initial capital. And if you have one strategy that starts with 20,000 initial capital, and then you have another strategy that you coded that starts with 50,000 initial capital, you cannot compare those strategies because they started with different capital amounts, so you cannot like easily compare them. So what matters is that you just use a consistent value for all your strategies. And I don't recommend trading daily chart strategies without at least 20,000. Um, and generally, if you don't have 20,000, you probably shouldn't be trading at all, but I don't want to dive into that too much. But what I personally use is 50,000. Now it's important to just type the number out. Don't put a comma here because again, a comma indicates that you're adding another argument. So you'll notice that the comma is what separates every single one of these. So you just need to type the number out. The second thing that we want to add is a default quantity value. So when I take these trades personally, I tend to use options, and I like to buy 60 days out or longer with a delta of zero point 0.7. And so that is kind of that's kind of like my proxy for 70 shares. You can just not put a default quantity here and it will assume that you're only trading one share. But since I actually trade these with options, I like to use 70. So type the letters DEF and you'll see that two things pop up. One is default quantity type and the other one is value. What we care about is value. And then if you're going to take this with 0.7 delta options, you put 70. If you just want to choose a number for shares, you can just put 10 shares. Again, it's similar to initial capital. What matters is that as you code these strategies, you use a consistent value for your initial capital and your default quantity. Otherwise, it's going to be very difficult to compare these strategies against each other because they're just trading different amounts. The next thing that we want to add is commission. And so whenever you take a trade with an option for like most brokers like Thinkorswim, generally your commission is going to be uh, like for me it's like 0.65 cents to complete the trade. And so what I do here is uh, just set commission value to 0.65. You may have to look up what your commissions are for your broker, but if you're going to take it with options, it's probably going to be about 65 cents round trip. And then you want to make sure that this commission value is set per order. So if you buy one option with a zero point 0.7 delta, it's going to cost you 0.65 for that option. Um, Again, we're using 70 shares to proxy the option in this strategy. If you just put the commission value at 0.65, it's going to take that and multiply it by the default quantity value, which is not actually how it works when you buy one option. You're paying 0.65 cents for that one option. That's sort of like a proxy for 70 shares. So you also need to set commission type, which is going to be strategy.commission cash per order. And that just means that your one order of 70 shares, which we're using in this strategy as a way to represent 70, or rather a zero point 0.7 delta option. I know that they're not exact, but uh, you cannot backtest how you would have traded this with an option in the TradingView backtester. And in fact, most backtesting programs don't let you do that because it's just too complicated to calculate what the implied volatility was at the time and all that other stuff. So you want to set the commission value to something that makes sense. Again, you can just use my values here if you want. We're going to add another one, another argument here, and that's going to be called pyramiding. So you can just type PYR. So pyramiding is basically scaling in. So if pyramiding is set to 1, that means that if the strategy is already in a position, it will be allowed to take another position. We don't actually want that for this strategy because I don't see, I mean, if you just think about the strategy, you're trying to capture a breakout and there's no need to be scaling into that breakout. If either the breakout is a breakout or it's not a breakout. So we're actually going to set this to 0. You can set to 1 if you have a strategy that you are willing to scale in with, or if scaling in is absolutely part of the strategy, then you can set pyramiding to 1. And then the last argument we want to add, and I know that we're adding a lot of arguments, but this is any sort of back testing you do, you need to be setting these values because the back tester needs to know what's your initial capital, how many shares are you trading, what's your commission value, and then are you willing to scale in? You need to be able to set these for the back tester. The last thing we're going to do is set process orders on close to true. So you just type PRO and then hit enter, and then that's going to set to true. And that just means it'll give us the signal when the bar closes rather than on the next day or like the open of the next bar. And that's just important because for the back test, we're assuming that we can buy the close. And I know in reality that we cannot buy after the market has closed. But there are a few ways you can proxy this in your actual live broker. One way that I'm not going to cover here is that you could use the last 15 or last 30 seconds of the market as a proxy for the close. So if the strategy would have taken a trade, um, or rather if the conditions for the strategy are met in the last 30 seconds or last 15 seconds of the day, then go ahead and enter a position. Another way, which is what I do actually, is I wait until the next day to wait for a pullback. So similar to how I mentioned in the slides that Perry Kaufman has data and back tests that show that U.S. equities are mean reverting in the short term. Usually there is a pullback that pulls back to yesterday's closing price, where I can enter the trade before the market continues. And so that's actually how I take these trades. Sometimes the market doesn't give me that. Sometimes it just gaps up and goes. And I will say that um, usually if it gaps up, it's still going to pull back. But there are rare cases where it gaps up and goes. And there's back and forth arguments as to should you wait for a pullback? Sometimes the pullback doesn't happen, and the gap up is like proof that the breakout is working, and so you should just buy the gap up. I just skip the trade, honestly. I only take it if I can get the pullback, just because I want to be as close to the strategy as possible. And since we're generating these signals on the close, then I want to be able to enter at the close price of the day that the signal is given. Um, and so I usually only take the trade if there's a pullback. So go ahead and hit enter. Um, I talked about how we use comments as notes. We're going to use comments to structure this script. So we have two entry conditions and an exit condition, and those are going to be our comments. So the first entry condition, let's go ahead and type two forward slashes, and just type entry condition 1. And again, these are notes. They're not going to be executed. They're not actually code. They're just something for you to refer to and also structure the script. So our first entry condition is that the high of today must be higher than the high of the past 10 days. Now, you'll notice that I wrote the high of today. And some of you may be wondering, well, when does this code actually execute? And for those of you who discretionary trade and do bar by bar analysis, that is basically your answer, which is that on the close of every bar is going to run all of this code. And that's going to be relevant, more relevant later whenever we actually flesh out this condition 1 with some actual code. So for now, just type this comment, and then once we get back to this section, I think it'll make a little bit more sense. So the second entry condition here is that the day has to close in the bottom 15% of its range. And if you want to know why, then just go back to the slides where I explain why that's an entry rule. And the way we're going to capture that range, or where it closed in that range, is based on the IBS calculation. And so really that condition mathematically is just going to be today's IBS must be less than 0.15 or 15%. And then if those conditions are true, then we're going to take an entry in the market. So I'll just write a note, or rather a comment, for where we'll put that entry. And then our exit condition is sell when today's close is higher than yesterday's high. So that sets us up with a good structure to follow. We're just going to go into every one of these and write code to kind of fill these out and flesh out each of these sections. So let's go ahead and start with entry condition one. And I recommend that you just follow along because some things will make sense only after you follow along and type rather than me trying to explain to you every single like technical detail about programming. And it's sort of like learning a new language. If you try to understand like why the grammar is a certain way, that's going to be a cumbersome way to learn as opposed to just talking to people and then kind of picking it up and then maybe going back later and then reading some of the history of why the grammar is structured the way it is. So the first thing we need to do is check if there is a new 10-day high. And so we're going to create something called a variable, and you can give this any name you want, but generally you want to name the variable something that makes sense. Um, and then you have to give the variable a value, and the value we're going to give it is false. So we're calling this new 10-day high because until there is a breakout, there's no breakout. And so we're just going to say new 10-day high equals false. And the variable name that, this didn't have to be called new 10-day high. We could have just called it anything we wanted. Um, it allows us to give context to the code that we're writing. So because we could write this code and never have something called new 10-day high, and we could just be using words like false and true. But it makes more sense to give to create variables with meaningful names so that you can better understand the code uh, if you were to look back on it later. So until there's a breakout, there is no breakout. So we just assume at the close of a bar by default that there's no new 10-day high. But we do want to check if there actually is a new 10-day high because if there is, then we actually want to change this to true. So the reason why you want to set this to false by default is, again, you don't want it to be true. You don't want your entry conditions to already be true. You want them to be false until they are true. So to determine whether it's true or false, we have to check whether the high of today is higher than the high of the past 10 days. So PineScript has a few ways to determine or it already knows, I should say, a few things about the chart. It already knows the high of the current bar. Since we're on a daily chart, it's going to be the high of the day or the daily bar, and that's just going to be high. That is the high of the current bar that just closed. I mentioned that every time a bar closes, it's going to run all your code. So this is the high of the current bar that just closed, and since we're on a daily chart, that's the high of the day. It also knows the low. That's just, you just type the word low. It knows the close of the current bar, and it knows the open of the current bar. So in order to determine if if there's a new 10-day high, we're going to use those values that I just typed. But to PineScript also knows the values of the previous bars, and so if high, so high is the high of the current bar that just closed, so the high of today basically. Um, if you want to check the high of the previous bar, you put an open set of square brackets and then you put 1. That is the high of the previous bar. And since we're on a daily chart, that's going to be the high of yesterday. If you want to know the high of the day before that, so the day before yesterday, we would change this to 2. Technically, when you are typing the word high just by itself, there's an implied high 0, which means the high of today. But you never actually type high 0. You just type the word high. So to use these to determine whether we have a new 10-day high, we have to write what's called an if statement. So we type the words if, then we add open parentheses, and then in this if line, we're going to put our conditions. And the conditions that we're going to check are, is today's high higher than the high of the past 10 days? And it's kind of cumbersome to write this because you're going to have to check every single day. So the is today's high greater than the high of yesterday? So this is basically a way of saying if the high of today is greater than the high of yesterday, then run the code that's going to be following this if statement, which we'll write later. But we need to check every single day of the past 10 days. So we have to type the word and, which means that there's going to be another condition that we're checking. And the code that's going to follow this if statement is only going to execute if every single thing that's in these parentheses is true. And so we need it to check the past 10 days. So we also need to make sure that the high of today is greater than the high of 2 days ago, and the high of today is greater than the high of 3 days ago. And you're just going to continue doing this until you have uh, gone all the way to the high of 10 days ago. So let me just type this really quick. Whoops, I forgot to type the word high. 7 and high greater than high 8 and high greater than high 9 and high greater than high 10. So this is what it should look like when you're done typing all these high greater than high checks. So then when you hit enter on this line, you're going to notice that it automatically creates an indent on the next line. So whereas all of these previous lines have just been all the way to the left, there's an indent here. And that's important because it's only, so I mentioned that it's, if all of these are true, it's going to execute the code after this if statement. But it's only going to execute the code that's indented. So these other things that we're going to, the other pieces of code that we're going to write later are not going to get executed with just because these if all these if conditions are true. But if all of these are true, then we have a new 10-day high, right? Like if the high is higher than the high of the past 10 days, which is what this if statement says, then we have a new 10-day high. And so we want this actually to be true. So you'll notice that I use a colon here, and that's just because if you've already set this to false, if you've already created a variable and then you set it to a value using equals, in PineScript, if you want to change that variable, you have to put colon equals. If you just type equals, it'll give you some kind of warning saying that you already created a variable called new 10-day high that has a different value. If you want to change that variable, then you need to use a colon then equals. So if we have a new 10-day high, we need to set our variable new 10-day high to true. And if we don't, then create a new line called else, hit enter, and then we're just going to set it back to false. So again, the code that is indented after this if statement is what's going to be run if this entire if statement is true. Everything in this conditional is true. Otherwise, it's just going to set to false, and it's only going to execute, again, what's indented following that line. So that is our first entry condition. Either we have a new 10-day high or we don't. So the second entry condition is where we're going to introduce the IBS calculation. IBS stands for internal bar strength, and you can, I don't want to really dive into it too much. I'm just going to give you the formula here. But IBS is equal to the close of today minus today's low. And then you're going to divide that by today's range, where today's range is basically just high minus low. So I don't want to really explain this or draw any diagrams. You can either think about this or you can go look up the IBS formula yourself, and there might be some diagram depending on what website you're looking at. But this basically gives you where did today close in comparison to its range. So if IBS equals 0.15, it closed in the bottom 15% of the range. And if it's 0.5, then it means it closed exactly at the midpoint of today's range. So today's IBS has to be less than 0.15. So that leads us to our entry condition. Our entry condition here, well, first we're going to assume that our entry condition equals false. So similar to the new 10-day high, until our entry conditions are true, they're false. But if we have a new 10-day high, so if new 10-day high equals true, basically, and IBS is less than 0.15, then we actually have our entry condition, right? And this might be a little confusing, I guess, but basically it's saying if new 10-day high is true and IBS calculation, this is always going to evaluate to some kind of number. If the IBS calculation is less than 0.15, then both those conditions are true. If new 10-day high equals false, then this whole if statement is actually going to fail. Because the way an if statement works is everything in it has to be true. So new 10-day high has to actually be true, and IBS less than 0.15 has to also be true. And so if both of those entry conditions are true, then our entry condition is true. And if both of those are not true, then entry condition equals false. So now that is everything needed for entry condition. Now we need to actually have the strategy take a trade. So the way to do that is we're going to add another if statement. So if entry condition, and that just means if entry condition is true, then we're going to type the word strategy entry. And then we have to give a name to that entry. And typically I like to name the entry the strategy name and then the word like long if it's taking a long position. So I will just copy the strategy name and type the word long. And then add a comma because we need to also tell it is our entry long or short. And so strategy.long to indicate that this entry is a long entry. If you wanted to go short, then it's just the opposite. But we're going long. And then you can add a comment too. Typically, I just set the comment equal to the entry name. And then that is what will take or cause the strategy to take an entry in the market. And then now what we need to do is check the exit condition. So to complete the script, we're going to make another variable called exit condition. We're going to set to false. And then the exit condition is if today closes higher than the high of the previous day. And if that's true, then exit condition equals true. Otherwise, exit condition equals false. Some of you may notice I don't have an else block on this if statement on line 24. And that's just because there's nothing to do. Like if this entry condition is true, we take an entry. If it's false, we don't do anything. And there's no reason to put an else block if you're not going to do anything, right? Like you wouldn't put else and then just have a blank line of indented code. That's not necessary. So really, it's just if it's true, we do something, and if it's not true, we don't do anything. So if our exit condition is true, then we need to exit the position. So here we're just going to type if exit condition, and then the way you close that position is you type strategy dot close, put parentheses, and it needs the position to close. And since our position is called the position is just what you named the entry, so just copy and paste that in here. And some of you may say, well, what if the exit condition is true, but the entry conditions were never true? PineScript is smart enough to figure out that you're not in a position, and so it will not close anything because there's nothing to close. It will specifically look to see if you had an entry called new 10-day high and low IBS long, and if there never was an entry, or if you're not in a position like that has that sort of I guess trade ID, then there's nothing to close, and PineScript is smart enough to figure that out. So here you can now click on this, which will save the script, and it will ask you what the script name is, and usually it defaults to what you named your strategy. So I'll just click save here. So once it's saved, you'll see this message down here saying that it has been saved, and then you can click add to chart. And there we go. You'll notice that this is slightly different than what I showed in the slides, and that's just because the way we coded it, I used I think I used something different. One of these values was different. In the slides, I think I showed a different commission value just because I think I was showing like the old TD Ameritrade commission value, which is back whenever I originally coded the strategy. That's what my broker was. But then after transferring to Charles Schwab, my commissions changed a little bit. Honestly, they got a little bit worse. And so, yeah, I pay 0.65 per commission now. And so the profit factor, as you can see, has decreased slightly, as well as the average trade, just because we're paying a little bit more in commissions. But for the most part, Yeah, so for the most part, it matches it exactly what I showed on the slide. And yeah, that's the strategy. New 10-day high and low IBS. One thing that some of you might be wondering is whether this works on more than just the SPY, and the answer is yes. I also take this exact same strategy, and it's part of a portfolio or a strategy system or like portfolio strategies that I also trade on Facebook, which is now called Meta, or at least the ticker is called Meta, and Microsoft, and a few other companies I also trade it on as well. You can also trade it on the Qs. It works pretty well there. But again, this series is focusing on building a portfolio of trading strategies to trade on the SPY. And then I think the other question that some of you might have is whether I simulate these trades with a prop firm. And that's just because you can take these in the overnight market. So let's say you're trading ES, or really because ES is like 10x leverage, you'd rather take this on MES instead. And you get the signal at the close of the day. So let's say you get this signal here. Could you just trade the overnight open? And the answer is yes. And I have done that in the past where I'm just like, look, I've got a swing trade strategy, or not, swing's kind of the wrong way to call this. I've got a daily chart strategy that's telling me to go long, and that strategy has a 76% win rate and strong profit factor. I'm going to enter in one or two MES in the overnight futures on my prop firm account, and then I'm just going to hold until the close of the next day. And if the strategy has not exited by then I will just close the trade, because most prop firms require you to close by I think 4:10 p.m. Eastern time. And then on the next overnight futures open, I will re-enter that trade. Like I'll open another position and just keep doing that until the exit condition is met. Um, I don't do that as much anymore because I have recently started developing actual day trading algos uh, that aren't going to be part of this series. But to answer the question, yes, you could simulate this in the futures and trading a prop firm just by taking a position on the Asia Open and the Globex session. Um, but I would not recommend trading a full ES because you are 10x leveraged on the futures, and the drawdown will destroy your account. So hopefully you were able to follow along and make sense of what we've built here. I know that some of you are probably just going to take this and then maybe sometime down the line in the future actually try to develop strategies. Some of you may just I don't want to call you leechers, but some of you are just going to watch this series and try to just take these strategies and not really contribute back to the community. And that's fine. I mean, I don't think these strategies are going to go away. And I think if you really are struggling for money, then hopefully this kind of helps you. But again, similar to what I said in the slide deck, I don't think you should be trading at all if you're trying to make money. Like if you're really struggling for money, there are better ways to make money uh, rather than trading. Trading is kind of a better investment vehicle, or rather a better vehicle after you have a lot of money and you're like, some of these other systems, I've reached the point where I can't scale them anymore and I need another way to scale my massive wealth. Trading is honestly a good vehicle for that. um, but yeah, I do hope that some of you guys will follow this series and actually code these and add them to your own trading view, and then start playing around with different ideas so that you can also start contributing back to the community, because I would love to see some of your own strategies that you develop, so we kind of create this pool of knowledge and of wealth, so that we all help each other grow. And as some of you know, I am creating a section where I'm going to be taking the strategies that I trade live and creating like a secret section, and then in the Discord, and then to get access to that section, you have to develop a strategy, and then I'm going to watch it, like I'm going to incubate it, and then if it turns out that that strategy actually is good, then I will add that strategy to that secret section and then give you invite access to that secret section. So that way, uh, if you've proven that you've contributed a new strategy that actually works, then you now have access to all of the strategies and that section and that pool of other members who are actively developing strategies and contributing to the community to help all of us grow. And then the people that aren't really contributing and just here to try to leech strategies and try to make money and but never contribute will never have access to that section. So that has not really been developed yet, but by the time you watch this video, it might. So yeah, just stay tuned for that. But anyway, we are going to be developing many strategies over the course of this year, and I hope that no matter where you are in life, that this does provide some sort of value to you. So if you're interested in learning more, or even just talking about uh, this sort of stuff, I highly recommend that you join our community. The link is in the description. And to all of you trading out there, whether you're in the community or not, I wish you best of luck in the markets.